Credit Karma, is an interesting gauge of what's happening in consumers' lives right now, what's happening in their pocketbooks. Are you seeing a decrease or increase in app usage right now? And if so, how much?
Yeah, we're definitely seeing an increase, and we think that's actually going to go up further. So if you think about it now, people are just getting used to this notion of sheltering in place, and I think once people get over the notion that there is no toilet paper shortage, people are going to start thinking about what happens with their finances, what happens next, and I think that's what the realization that most Americans are coming to.
So how much of an increase are you seeing, and are you seeing an increase in people accessing their credit lines, and if so, how much?
Yeah, so we're seeing a lot more application. I think what we're seeing specifically are a lot more people looking into personal loans. I think most Americans are realizing that this might go on for a protracted basis, and people are trying to shore up their overall financial situation. So we're seeing, roughly double-digit increases in personal lending applications. Now, I think the counter of that, we're seeing slightly less credit card application. And a note here is fewer people are transacting because people are sheltering in place, and as a result, credit cards become slightly less utilized. Personal lending and having dollars in your checking and savings accounts becomes more important.
Meantime, the tax filing deadline has been extended. What impact do you think that will have?
Well, there's a couple of things, right? So first, it's been extended to July 15th, and that's important. And this is a ever-changing thing, but the filing has been extended to July 15th, but also the payment has been extended to July 15th. And that's important because it preserves more cash in consumers' pockets. And again, right now, cash is king. With the way that the markets are, with the credit markets, they're kind of frozen because we don't know what unemployment's going to look like. And I think what the government and what the IRS is planning on here is giving people a little bit more relief if you have, cash that you have to pay. Holding on to it a little bit longer is another sense of security. I think that's fundamentally important. And I should just note that right now it's the federal pieces that have changed. New York and California has followed, but each state is still varied as they're trying to catch up to the federal government.
Now, you started Credit Karma in the middle of a recession, and this wouldn't be the first time that Americans in recent history have seen stimulus checks. President Obama sent stimulus checks. George W. Bush sent stimulus checks. In your view, do these checks actually work for everyday Americans?
Well, I think they help bridge the short-term, gaps. And you have to keep in mind that, roughly speaking, a quarter of Americans live paycheck to paycheck. Roughly half of Americans don't have $400 in savings. So, $1,000 or $1,200 stimulus check goes a long way relative to where people are. But with that said, I think that it's only a short-term fix. Consumers really need to hunker down. They're going to need to think about what are their necessities. They're going to need to make a budget, and they're going to have to preserve their cash. They're going to have to learn how to make their cash that they have on hand go further in this economic environment, because we don't know whether this is going to be a 3-month thing or a 9-month thing, or even an 18-month problem. And consumers need as much optionality, flexibility as possible.
Right. Nobody knows the answer to that question. A lot of folks have credit cards tied to airlines, airline miles, and rewards. I mean, when airlines aren't flying, you can't rack up points that way. How do you imagine that impacting some long-term credit card application choices here?
Well, I think even as a more broad picture, I think it's really important to realize that credit card companies generally model the default rate to be similar to the unemployment rate. And because we don't know what the unemployment rate is going into all of this, credit card companies in particular are very concerned about who do you lend to in a world where, a lot of small businesses might be hurting. And I think that's the problem that we're seeing. And again, I think for most consumers, that's why having a plan is really important. That's why extending your cash lines are important. I think this is why if you have a mortgage or a car, having the opportunity to refinance so that you can preserve your cash flow, those will be the important things that consumers should be thinking about.
The Fed's decision to cut rates, how's that impacting some of your services like your savings offerings?
Well, the yield has gone down quite a bit, obviously, and that is actually, reduced the incentive to save. But the reality is a lot of people need to pull those dollars out. Now, the good side is that although short-term rates aren't directly tied to things like mortgages, what you are seeing is the bond rates going. That is driving an influx in mortgage refinances. That's great for consumers. The problem here is I think a lot of mortgage capacity has already been eating up. So what you're seeing is, mortgage lenders aren't even able to pick up the phone. You're not able to get appraisers out. So it's good for business in the sense that it drives more of the refinancing necessary to rally the economy. The flip side of it is shelter in place and the lack of resourcing makes the processing of those loans much harder. So that's the tension that we see in the marketplace.